My name is Caroline Mogure. The Kenya shilling has gained ground against the US dollar. According to experts, the continuous rally is as a result of inflows received by the government in January from major multilateral institutions, as well as the successful issue of the $1.54 billion denominated Eurobond, which has relieved the country of the pressure to repay its inaugural $2 billion bond. Our reporter Purity Nelima kicks off our bulletin with that story.
The continuous rally of Kenyan shillings over the last week has signaled a significant tide turn for the currency that was expected to shed value this year after shillings increased to over 160 against the US dollars. This has changed the inflow of dollar-denominated support from the International Monetary Fund (IMF), which disbursed $684 million in January 18th, followed by another disbursement bank on the 24th of January this year, to a tune of $385 million, with the African Development Bank set to further increase dollar liquidity in the country by an additional disbursement of $88 million. The experts now say they have given shillings in the short arm against the dollar. The shilling, which stood at 162 shillings against US dollars 3 days ago, has regained value to close the day at an average of 153 shillings to dollar, indicating insignificant gain, attributing to the lack of incentives for investors to keep holding back.
For any, let's say, importer within the country who has been suffering to get dollars, now they are confident that they will get dollars within the system over the next couple of months. So there is no incentive to continue holding dollars. So as a result, we have seen a lot of panic selling, but I don't think this is having a direct impact on the economy.
As a result of this Eurobond problem, the issue around uncertainty on exchange rate has been addressed. There's now confidence, and you can see the shilling is beginning to improve. As of this morning, I'm told it was trading around 151.
The panic sale of US dollar in the market is expected to see Kenyan shilling gain further against US dollars. Experts projecting that the shilling will hold steady at 140 shillings to the dollar and second and third quarter of the year, but they remain conscious that the shilling may not last so long as the macroeconomic fundamentals remain the same.
But then from what we are seeing, seems likely to be short-term. And once the equation is back in play, then we'll see the economy naturally scooping up more dollars for imports. And since we are not doing much in that with exports, then as a result, we could be seeing the dollar now tracking back against the shilling.
According to the National Treasury, Principal Secretary Dr. Chris Kiptoo says Kenyans holding the dollar should take the advantage of the current window so as to sell off their dollars to risk losing them, even as he says the shilling will continue to rally against the US dollar.
I want to encourage Kenyans, if you are holding any dollars because you are fearing Eurobond, please note that now the risk of failure to settle for the Eurobond is gone, and so you need to get back to business. Sell your dollars and get back to business. Don't do any speculation anymore.
It's now upon the citizens to sell or not to sell the dollars. For Tandao News Look at 1 p.m., I'm Nelima Purity.